deposits with banks. The other form in which people hold money is as deposits with banks. At any given point of time, people need only some currency for their day-to-day needs. For instance, workers who receive their salaries at the end of each month have extra cash at the beginning of the month. What do people do with this extra cash? They deposit it with the banks by opening a bank account in their name. Banks accept the deposits and also pay an interest rate on the deposits. In this way, people's money is safe with the banks and it earns an interest. People also have the provision to withdraw the money as and when they require. Since the deposits in the bank accounts can be withdrawn on demand, these deposits are called demand deposits. Demand deposits offer another interesting facility. It is this facility which lends it the essential characteristics of money, that of a medium of exchange. You would have heard of payments being made by checks instead of cash. For payment through check, the payer, who has an account with the bank, makes out a check for a specific amount. A check is a paper instructing the bank to pay a specific amount from a person's account to the person in whose name the check has been made. Thus we see that demand deposits share the essential features of money. The facility of checks against demand deposits makes it possible to directly settle payments without the use of cash. Since demand deposits are accepted widely as a means of payment, along with currency, they constitute money in the modern economy. You must remember the role that the banks play here. But for the banks, there would be no demand deposits and no payments by checks against these deposits. The modern forms of money, currency and deposits are closely linked to the working of the modern banking system.